to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, this week's market wrap with commentary and analysis from Money Metals Exchange, the company named Best Overall Precious Metals Dealer by Investopedia.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. Coming up, we'll hear an interesting interview with MoneyMetals.com columnist and gold market analyst Jan Nieuwenhuis. Join Jan and Mike Meharry as they discuss the topic of gold revaluation, exactly what that means, and how central banks might use it to their advantage to further inflate the money supply. Jan also examines the question of America's gold and how much of it may still actually be at Fort Knox. And Jan and Mike also get into the ramifications of all of the massive flow of metal from London to New York as traders try to take advantage of the arbitrage we've been telling you about so much in recent weeks. So be sure to stick around for this fascinating and jam-packed interview with gold market insider and Money Metals' own Jan Nieuwenhuis coming up after this week's market update. A huge number of news stories in recent days are bringing new light to an issue long shrouded in mystery: the status of America's purported stockpile of 8,133 tons of gold stored in Fort Knox and other government vaults across the country. It started when news aggregator Zero Hedge tweeted at President Donald Trump's head of government efficiency, Elon Musk. Quote, "It would be great if @Elon Musk would take a look inside Fort Knox just to make sure the 4,580 tons of gold is there. Last time anyone looked was 50 years ago in 1974, end quote. Mr. Musk responded, quote, "Surely it's reviewed at least every year." Senator Rand Paul of Kentucky then jumped in tweeting, "Nope, let's do it." A national leader on this front, Money Metals jumped into the viral fray, urging passage of legislation sponsored by the former Congressman Alex Mooney of the Gold Reserve Transparency Act. The stated goal of Mr. Mooney's bill is to, quote, "provide for the first true audit of gold owned by the United States in more than 65 years and subsequent audits every 5 years." The bill would require regular, credible audits of America's gold, which would include an accounting of any pledges, leases, swaps, or other encumbrances placed upon U.S. gold by either the BIS, the Exchange Stabilization Fund, the Fed, or other government people. It's understandable why one might think America, the country with the largest gold stockpile, would occasionally audit its vault holdings, similar to the way any private depository would. However, since the last credible audit in the 1950s, America's gold reserves have been subject to limited, flawed, and theatrical inspections. In 1974, the government conducted a highly publicized inspection of Fort Knox gold, wherein members of Congress and a few media viewed just a single gold compartment. That did not qualify as an audit in any respect. This public relations spectacle was followed by a somewhat more credible process by the General Accounting Office and the Department of the Treasury that kicked off in 1974 and concluded in 1986. Putting aside the fact that this was not a truly independent audit, Money Metals gold researcher Jan Nieuwenhuis has discovered that roughly half of the government reports from this process are now missing. The seals on some of the gold compartments appear to have been tampered with at various times. With a renewed desire for government transparency, Mr. Musk and his team of auditors could turn their focus to one of America's greatest open questions. Since 2014, the Sound Money Defense League, a nonprofit run by Money Metals, has been pushing for an audit of America's gold, including securing the introduction of the Gold Reserve Transparency Act. Other proposed legislation, including H.R. 2559 in 2019 and H.R. 3526 in 2021, called for the Comptroller General of the United States to conduct and complete a full accounting and assay of every gold bar at least once every 5 years, as well as a review of all transactions that have in any way rehypothecated America's gold. For good measure, the Comptroller General's report shall be made available to the public, and no redactions would be permitted, except to protect sensitive details regarding physical security. An audit like this has drawn support from sound money champions like former Congressman Dr. Ron Paul and a former Trump nominee to the Federal Reserve, economist Judy Shelton. A longtime advocate for American gold transparency, Chris Powell of the Gold Antitrust Action Committee said, Quote, "The big issue is not so much whether gold remains in the depository as much as whether it is encumbered by leases or swaps undertaken by the Federal Reserve or the Treasury Department," end quote. While the sound money movement at the state level has seen success over the last decade, federal progress toward restoring sound money leaves everything to be desired, including a lack of support for a bill that would block the IRS from assessing a 28% federal capital gains tax on the monetary metals. If America wants to shore up confidence in its currency, it must begin with a comprehensive audit of America's classical monetary asset, gold. And lastly, before we get to this week's interview, a report on this week's market action. Gold checks in at $2,941 an ounce, good for a 1.6% weekly advance, and, barring a late-day collapse, is headed for its 8th straight weekly gain. As for silver, it's pulling back here today, but is still coming in at $32.77 and is holding on to a 1.2% increase since last Friday's close. Meanwhile, both platinum and palladium are little changed on the week and come in at $990 and $1,004, respectively. Well, now, without further delay, let's get right to our exclusive interview with a highly regarded gold analyst and valuable member of the Money Metals content team.
Greetings, I'm Mike Maharrey, a reporter and analyst here at Money Metals, and I'm here today with journalist Jan Nieuwenhuis. He has been doing in-depth gold market research for well over a decade and is internationally recognized as an expert in the Chinese and Turkish gold markets, the COMEX futures market, the London bullion market, and much, much more. And he's been providing a lot of great original investigative research reporting over at Money Metals. And I'm excited to talk to you today, Jan. How are you doing?
I'm good, Mike. Thanks for inviting me.
Well, absolutely. There's, as we were just talking about before we went on air, there's so much going on right now. It's hard to keep up with everything that's happening in the gold markets and with the Trump administration. And it seems like every 45 seconds or so, there's some new thing that's kind of grabbing your attention. I wanted to start off and talk a little bit today about something that you've been writing about, and I've seen it a little bit reported in the mainstream, but I don't know that people kind of have a real grasp on really what's going on. And this is this whole idea of gold revaluation. And folks listening might have heard that term. They might have seen some headlines. But what exactly is this whole gold revaluation thing? What are they actually talking about, or at least floating the idea of doing?
Yeah, a gold revaluation account is actually a very simple accounting item on a central bank balance sheet. We are talking about central bank balance sheet because you and I can have a gold revaluation account as well if we make a balance sheet of our a private situation, or a company can do it, or a bank. But the thing is, when a central bank has a gold revaluation account, it can turn that unrealized gain into money. So if you visualize a central bank balance sheet, you have assets on the left side, you have liabilities on the right side. As we all know, on the asset side, there are government bonds, discount loans, there's gold. And on the liability side, there is the capital position, equity. What else? Well, currency, the monetary base, the treasury general account, things like that. Now, we have a system that is called double book entry accounting. So if you mark to market the gold on the balance sheet, so that's the gold on the asset side, if the price rises, as it does in the long run, because it's much more scarce than the denominator of the balance sheet, which is fiat money, then the asset side of the balance sheet grows. Now, in double book entry accounting, if something on the left side grows, then something on the right side, on the liability side, have to grow as well. And what grows on the liability side is the gold revaluation account. So, for example, if you bought gold for a ton of gold for $100, then so many years later, if it's at 29, you have a $2,900 dollars. You have a large revaluation account. Now, normally with central banks, the thing is that they own the gold. So they can use that revaluation account to turn into anything, right? So they own the gold on the asset side. On the liability side, they now have this revaluation account, which is just numbers. It's just numbers on a central bank balance sheet. It's on the liability side. And on the liability side, there are also different things. Right, there is a Treasury General account, so that is deposit from the government. There is capital, etc. And because it's just numbers, the central bank can turn these numbers from the gold revaluation account, or can move these numbers from one section to another. So they can move the numbers from the gold revaluation account to, for example, the Treasury General account or to their capital position, and just turns it into money. The only thing that happens to the gold revaluation account then shrinks, which results in a higher cost price for the gold. Now, that's how it works with most central banks. In the US, it works a little bit different. The US, the Federal Reserve doesn't own any gold, so it only owns gold certificates. In 1934, the Federal Reserve handed over all their gold to the US Treasury, and in return got gold certificates. These certificates are still valued at $42 an ounce. So that's very low, and if you would revalue that statutory value, or revalue that price, then also on the liability side of the Fed's balance sheet, something else would grow. And because the Fed doesn't own any gold, what grows on the liability side of the Fed is the Treasury General account, because the Treasury is the owner of the gold, of the physical gold. The Fed only has the certificates. So if they would go ahead and revalue the gold, at current prices, the Treasury General account would be increased by, let's say, $700 billion. Yeah, and they could just spend that money into the economy, and it would increase whenever the Treasury General account is not really part of the monetary base. But if they spend that money, then the money supply, the monetary base, as well as the broad money supply, M2, is increased by the same amount, because they spend it, and, well, let's not go into monetary plumbing, but the money supply increases.
Right. So basically, what they can do is print money. I mean, to use the colloquial term, there's no actual printing press or anything, but they can actually create money simply by doing an accounting maneuver. But the result is an actual real increase in the money supply, and then the government could spend that basically on whatever it wanted to, right?
Exactly. Yeah. There was one thing, because I'm not a lawyer, maybe the Fed has some control over what happens. I looked in the rule books of the accounting rules of the Federal Reserve. As far as I know, if the gold certificates are revalued, that revaluation, the surplus goes to the Treasury General account. Maybe there is some kind of loophole that the Fed can block this endeavor and use it for something else. But I don't think so. But it's like you said, it's just printing money.
So really, if you look at the impact as far as, well, I mean, it'd be great for the government, right? They could spend more money, and we all know the government loves to spend money. But from a kind of a broader economic standpoint, this is really just would be a very inflationary move. Am I wrong?
Correct. Also because, with normal QE, when, for example, the Federal Reserve buys government bonds from banks, only the monetary base increases and not the broad money supply.
Right.
But in this case, also what happened in 2020, the broad money supply, M2, was increased. So that's very inflationary. We got inflation after that. And the same would happen with this trick. Yeah. And that also happened, because in 1934, the statutory price of gold in the US was set at $35. Mm-hmm. And in 1972 and 1973, that was raised to $38 and $42. And that also increased the money supply. And maybe that, helped in or boosted inflation. And we all know what happened in the 1970s. There were two massive waves of inflation, and maybe this was a part of that.
Mm-hmm. Yeah. So do you think this is something that is actually really being considered, or was this something that maybe just got thrown out as I'm asking you to speculate here, obviously, but is this a realistic thing that they might do?
Yeah, I think so, because we have these rumors about a strategic Bitcoin reserve, and then it came out that they're going to, through an executive order, Trump is going to make a sovereign wealth fund. Now, going to buy, I don't know, but I don't think they're going to, raise taxes for this sovereign wealth fund. I think they're going to buy this or do the gold revaluation and fund the sovereign wealth fund through that. And also, that was my answer.
It's just wild to think about that. You can do an accounting trick, and all of a sudden, there's all of this new money. I guess if you're a government person, it's great. But for me standing here, I'm kind of a little bit disturbed by the possibilities of this.
Yeah, I can imagine. And, if Trump, for example, would say, well, 700 billion is not enough for me, he could, if he also takes over the Fed, he could print money to buy gold and increase, it would be a bit illogical, and then increase the gold revaluation account even more, which would give him more money. And then he has whatever, 2 trillion to spend. So anything is possible. When I started writing about the subject was in 2022, and the first thing I thought about was, on this balance sheet of central banks, you also have government bonds, and the world is just draining in debt. And all the debt, if there's a crisis, the government bails out the private sector, and then central bank bails out the government, and all these government bonds are on the balance sheet, and the debt is too high. And now, especially with interest rates above zero, that's just not sustainable. So my logic, thought was that they would write off some government bonds from the revaluation account.
Right.
It just and that's not money printing. It just canceling some bonds and reducing the gold revaluation account. That would be a better option. But yeah, it's let's see what happens. It's also crazy if you think about it. If you would buy Bitcoin with it, that's just pure speculation, because you don't really know if Bitcoin will be around in 10 years, because it's man-made. It can be destroyed by mankind. I'm not going to go into the technical stuff about Bitcoin, but it's very speculative, and at the same time, you're reaping, let's say, profits from the gold revaluation account, which already has shown in the last 5,000 years to increase in value, denominated in fiat currency. So why not keep it to the gold and keep it like that?
Yeah. From a practical standpoint, it's really no difference than like the Romans clipping gold off their coins, is it? It's the same principle. It's just using computers and high tech as opposed to the old school way of debasing the money.
Well, yeah. In terms of inflation, it is. Yeah. And the only thing is that the funny thing is that, in my mind, how I think of the monetary system is that the gold price will always rise. And this is true, if you take a currency like the pound sterling, for example, which is, has been around for centuries, you see, not every year, because there were gold standards, but, after so many years, the price always increases because
right.
Supply of gold, the growth of the above ground gold supply isn't enough for mankind's need for liquidity. Whether it's a pandemic or a war or whatever happens, humans always need more money, and they, create more money than there is gold, and the price of gold has to go up. Now, that's unfortunate if you save in fiat money, but if you stick with the gold, you're untouchable.
Right. Yeah. Stick with real money. Right.
Yeah.
Well, okay, so let's look at another thing that is being discussed out there, and I think this has gotten more mainstream attention than the gold revaluation, and that's the possibility of them auditing the Treasury's gold and finding out if the gold is actually in Fort Knox. Is this something that you think is realistic, or is this more political noise?
I hope it's realistic, because I started writing about, when I became a gold analyst, it was in 2014, probably professionally. There were so many stories always about, Fort Knox being empty, and the US, by the way, all the vaults were empty, and, it's like a continuous story, but Fort Knox was empty, and also the other vaults, and the Fed doesn't have any gold and whatever. And, I can't go into that vault and have a look at it myself, even if I was an auditor, which I'm not. So for me, the only way to check this, to analyze it, was to study the audits, which started in 1974. There was also rumors of Fort Knox is empty, and then a few vault compartments went open. The press was invited. It was a whole spectacle. And after that, what they did is they launched the continuous audits. So there was a program to audit 10% of the gold every year. And when compartments were audited, they closed them, they put a permanent seal on it, and they went on. And then every year they only had to inspect if the seals were not broken and move on to the next vault compartment, and so forth. Now that was a good idea, but it was never really finished. So in 2011, there was a congressional hearing. I think Ron Paul led it, and a lot of people, the auditor of the gold, the OIG, Office of Inspector General, had to testify, and all this information came out, and I collected it all, I studied it all, I submitted countless of Freedom of Information requests at the OIG, at the Treasury, at the Fed, at the National Archives, at the US Mint, which is the main custodian of the gold. And what I found was that the auditing procedures have been so as if the audits were done by amateurs. So many mistakes. I mean, they used the wrong scales, and assay samples were missing, and they had to close, or they had to open some compartments again because they forgot to put the assay parts back in. The list is endless, and but what really struck me is that the plan initially was to open vault compartments once, and if they were audited, they should have been closed and not opened ever again.
Right.
And most of the vault compartments have been opened 1, 2, 3 times again. So a really strange situation. We can think, what could possibly have caused this? Maybe auditing standards around the world changed, and they shifted from to a new protocol, whatever. But looking back on it, and they even lied. They even lied under oath about this, because some of these things, the auditor, which did a testimony in 2011 with Ron Paul, knew about all these reopening of vault compartments, but he didn't mention it. He totally avoided the subject. So there is something, I can't prove that the gold isn't there, but it's definitely worth. I mean, these audits are just so weak, and also the fact that still, I spent some time on Twitter or X now. Maybe I shouldn't, because there's a lot of noise there, and most people are still unaware of these audits. They all say, well, the last audit was in 1974 or 53, or it has never been audited. You can just find the audit reports on the website of the OIG. There are 2 audit reports: the gold stored at the Mint and at the Federal Reserve. And so if the audits were done correctly and properly, and it was all fine and dandy, why wouldn't the US government, the Treasury, flaunt with the results? They don't, right? They rather not tell about these audits, because if people investigate them, they would find all these issues.
Yeah, and when you have smoke in the room, it just makes people more and more suspicious. Especially when the explanations for the smoke don't line up with the reality that you're seeing with your own two eyes. What would be the ramifications if they did, let's say, open it all up, do a thorough audit, and they find out, let's not even say all of the gold, but let's say half of the gold is missing? What would be the ramifications of that?
That is so hard to predict. I think the gold price would rise because, basically it would mean there is less gold in the system, or it's somewhere else in the system. Anyway, there's less gold backing, or not backing, but supporting the US dollar, because, every reserve currency in the world has gained this reserve currency status because there was always a lot of gold behind it, right? And of course the military, but just like the dollar and the euro, etc. And the Chinese are trying to do the same now,
right?
And if there's less gold, there would be less trust in the dollar, so the dollar would go down relative to gold. I think that would happen.
Yeah, it's interesting, and who knows what the political ramifications would be on something like that. It's there's so much stock put in what how do they put it? The full faith and trust of the U.S. government, and if that is undermined, who knows what that would do to the bond market, or what kind of trickle down or ripple effects that would have, on the financial system as a whole, which it kind of makes me think that they will somehow manage to avoid doing it if at all possible.
Yeah. I also, not only, they can do it, and then the conclusion could be, okay, only half of the gold is here, but then the next conclusion would be, okay, who the hell?
Where to go?
Yeah. And what is the conspiracy here, and what on earth has happened, and how could it have happened? That would be the biggest scandal ever. Of course, have a world reserve currency and half of the gold supporting it, giving it some credibility, is missing.
Yeah, it's interesting. Well, I've been posting on X. We've had a couple of articles written about auditing the gold, and I've been tagging Doge and Elon and President Trump. So maybe we can badger them into doing it. It'd definitely be interesting to see that happen. The other big thing that's kind of been going on in the gold market, and this is another one of those things that seems to be moving really fast, is this movement of gold out of London to New York, and we've also seen some gold moving out of the Asian markets, moving to New York, and of course, ostensibly, the reason for this is worry about tariffs, and it's created this kind of arbitrage effect that has pushed the futures price in the U.S. Up much higher and created this opportunity. What's kind of been going on with that over the last couple of weeks? Are we still seeing this movement of gold? And are we still hearing about shortages in London and even in Asia?
To tell the truth, it's basically like you said. It's a fear of it's a tariff threat. So people in America anticipate a higher gold price because of tariffs. So they either buy it now and also hedge it on the COMEX, or they borrow it or whatever. Also, speculators jump on it because, if the gold price would rise because of it, you go long and you just ride the wave. Then it becomes this big circus also on X. And I guess that also helps making it into a hype. There's a lot of misinformation about it. Some people think, it's connected to the audits of Fort Knox because, they're going to audit it, and then it's probably empty, and so they have to import a lot of gold, and so the U.S. government would be taking delivery on the COMEX of the gold, which is of course very nonsensical because central banks only keep 400 ounce bars, roughly weighing 400 ounce. And on the COMEX, the contract is 100 ounce. So it would make no sense to take delivery of those contracts. And that they don't even need to go through the COMEX. I mean, the Treasury, if they need gold, can just buy in London or elsewhere from a refinery in Switzerland, 400 ounce bars, and they can ship it to the United States. And they can also choose to do the shipping themselves, and then it would be exempt from being reported in customs statistics. So if central banks buy gold abroad and they say, well, okay, HSBC, can you take care of shipping and insurance and bring it home, then HSBC has to, has to go through customs, and we can see it in the customs data. But if central banks do it themselves, and they can, then we don't even see it in customs data. So everything we see is just mostly normal market practice. People anticipating a higher price. You get an arbitrage opportunity, which is a difference between the price in London and the price in New York futures. And then it's very easy to buy in one place and sell in another. Mm-hmm. And but we also need to take into account that, not only the arbitrageurs are making delivery, there are also a lot of people that are taking delivery. So there is real demand of a lot of gold, physical gold in the US now. And that can also be explained by the tariff threat. But it's worth noting, and it definitely has been supporting the gold price this year.
So do you think realistically that precious metals would be included in any kind of broad-based tariffs? It seems to me that because gold and silver are primarily, monetary instruments, that would be excluded. But what's kind of your view on that? I mean, and again, we're just speculating here, but is that something you think is realistic?
I agree with you. I mean, Trump is, we hear him talk about Bitcoin these days. Maybe he did so also to, get some votes. But we also know he likes gold. He's been talking about gold all his life. And he knows it's a monetary metal and it's not, a commodity. And there's no, for example, a jewelry manufacturing industry in the United States, that is very big, that he wants to protect. It's just, it's a monetary metal. It's a currency. It's the second world reserve currency now behind the dollar. Right. So it would be very strange to put a tariff on that. So, it wouldn't make sense to me. But, that's the short answer.
It's interesting because I think this is a phenomenon that we're going to have to get used to as we move into the Trump era, is that, he does things kind of by the seat of his pants sometimes. And you get these, you wake up one morning and there's just all of a sudden this order or this tweet that kind of sends everything abuzz. And then I think a lot of time he does it for effect. Like he'll say something and then he'll back off of it. Like the whole thing, we're going to own Gaza. I honestly think that was probably a kind of a bargaining move. And he does this a lot, but it's hard to parse out what he actually is going to do in terms of concrete policy and what is noise and negotiation tactics. And that makes it really difficult from an analyst perspective to kind of get a good handle on, what's going to happen moving forward, because there's always these question marks out there. Do you kind of feel that too?
Yeah, exactly. But I mean, it was brilliant what he did, for example, with Mexico and Canada. I recall that he first was barking about tariffs, and then he wanted to negotiate, and he just got what he wanted. Yeah, right. And it's just also really strange that others are falling for it, and they give away something just because of a threat. On the other hand, he just uses its leverage. You can only make these deals, or you can make these threats if you have leverage. If you're right. In a significant country, you I mean, Peru could say all this, but they wouldn't gain anything from it. And we also see on the other hand that he is doing things. He is now excluding Europe, and he is talking to Russia in Saudi Arabia about, and that is some really hardcore geopolitical changes, right?
Well, yeah, there's just so much stuff going on. It's going to be interesting to parse it all out as we move forward. And I guess from an investor standpoint, just be vigilant and make sure you've got real money. I think what you said earlier is really a poignant point. If you have gold and silver, you're going to be shielded from a lot of the craziness that's going on, especially with the upheaval that we could see with the dollar and other fiat currencies. So, where can folks follow what you're doing? I know we're publishing you over at Money Metals, and I believe you're active on the X, which I can't quit calling Twitter. But where can folks follow what you're doing?
Yeah, I'm on Twitter. My handle is JanGold_. I'm there every day because it's just, it's paramount to what I do, to my job. But like we just said, it's kind of a circus there. So you can follow me there, or just subscribe to the Money Metals newsletter and get my articles there.
Yeah. Well, you're doing great work, and really appreciate having you on the team, and really happy to have your insights, especially on the gold revaluation thing, because I'll be honest, that's something that, like we were talking about, it's hard to keep up with everything. And there's certain things that I'm kind of keyed into, but then you just have all this other stuff going on. It's like you almost feel like a squirrel. So it's really good to have another set of eyes and expertise out there. So we really appreciate what you're doing.
No, for the gold revaluation account, when I started investigating it, and I found that in 2021, the central bank of a very small island, it's pretty close to where I live now, but in the Caribbean, used its gold revaluation account to increase its capital position. And I thought, hey, how can it be? And I know some people in the gold industry, and then eventually I got in contact with a consultant. He's a former IMF economist, and he consults central banks. So this is one of the best brains out there when it comes to central bank accounting. And I think I had like 5 Zoom meetings with him, and in the end, I found out, not because he told me, but because I was thinking outside of the box, and he was like inside of all the accounting rules or whatever. And I was like,
right.
Those are just rules. It's just numbers. They can do whatever they want, you know. And now, the whole world is talking about it. It's crazy, yeah. But you need it. We are at the end of a debt cycle, and you need this kind of tricks, or to lower the debt, or to increase spending, or whatever, to get votes, whatever. And I think it will be very inflationary. Also with global trade, all the tariffs, that's going to create inflation. But that's what they want, maybe, to lower the debt to GDP levels, and gold will benefit.
Yeah, that's the bottom line. And as we've discussed, it's always real money. And it's the one thing that they can't print it. They can't create it out of thin air. They can manipulate the books maybe, but it is what it is. It's a real tangible thing. And I think that's important to remember. So, well, thank you so much for taking a little bit of time out of your day. I really appreciate it. And we'll definitely talk to you again soon.
Thanks, Mike. Have a nice day.
You too.
Certainly a lot going on when it comes to gold and market news these days, and you just heard from 2 of our main sources for the wonderful content you'll find at moneymetals.com/news. And I highly encourage you to regularly check out that page on our website, and also keep an eye on your email inbox as we disseminate the great information guys like Mike and Jan are putting out on a consistent basis here at Money Metals. Well, that will do it for this week. Be sure to check back next Friday for our next weekly Market Wrap podcast. And of course, you'll want to check out the Money Metals Midweek Memo each Wednesday, hosted by Mike Meharry. To listen to any of our audio programs, just visit moneymetals.com/podcasts, or find them on whatever podcast platform you prefer. Until next time, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a wonderful weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by to answer your call during business hours, Monday through Saturday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.